Hello, Maverick traders. This is Rob Reinhold, and welcome to the Market Roundup. This is August 4th, 2022. I wish I could come on and say that this was a very exciting day, but it is not. We had the S&P basically flat, down 0.08%, Dow down about 0.25%, Russell flat, NASDAQ up about 0.4%. So the big news of the day really was the Bank of England. The Bank of England raised rates as expected, but also came out and unexpectedly said they forecast a recession in the second half of the year. Today's price action was really just a consolidation day. And you can see here in the SPY, we had a very tight candle that was pretty much a full-on doji. And it's happening right up in this resistance. Now, we talked about this resistance level on the weekend, and we talked about how we thought the market was likely to move up into this level this week, but not really go anywhere. And so far, it's been maybe a little bit stronger than that, but really hasn't broken out of this big resistance level yet. So we expected there to be some consolidation in this area, and that's what we're getting. If we take a look at the NASDAQ, we also expected this to move up into its consolidation level, and sure enough, we are running right up into this resistance. But take a look at the candles. The candles are very, very bullish on the NASDAQ, much more so than the S&P. We are seeing some relative outperformance in the NASDAQ on this last little run higher. If we take a look at the heat map, we can see that it is just a mixed bag. The clear loser today was energy. Oil dropped below $90 a barrel to finish at $88 a barrel, and you can see that the energy sector didn't like that at all. Outside of that, lots of salt and pepper, lots of reds and greens mixed together. Really not a clear day at all whatsoever. Advanced decline line was about 50-50. This was about as boring of a day as you could possibly get in the market. So let's take a look at our outlook for the market, where we stand. This is where we stood on the weekend. We said the market was a +2, moderately bullish market, and the weekly outlook was a +1, meaning we thought we'd float a little bit higher up into these levels. The real test is going to come when we get into this range, and this is right where we are. The market definitely has a bullish feel to it, but we are running into this resistance area. Our call at Maverick here is that we need to consolidate this area. We could likely see another week of sideways before we actually get a move higher or lower. Now, with that being said, we do have a pretty big announcement tomorrow. We do have the US payrolls report that could change some things. So let's take a look at some potential trades. And as I said, tomorrow at 8:30 a.m. Eastern Time, we have the payrolls report. There's likely going to be a pretty decent sized move off of that report. Everything we're talking about in charts, that could change by tomorrow's open, but let's talk about some of the bullish, neutral, and bearish setups we have here. Let's take a look at some bullish trades here. First one here is SHLS. This is in the technology company. This is Shoals. As you can see here, had a nice gap up a couple days ago. We have really just consolidated that, pulled back a little bit from 24 down to 22, and you can see today's nice little candle here where we actually closed higher than yesterday. Definitely looks like a decent entry here on Shoals. If you take a look at this trend line, we could have a run all the way up to 26 if the NASDAQ stays bullish. This one is volatile, so we do like trading volatility with vertical spreads. I think something like a 22-25 vertical spread would work out quite nicely. Next, in the communication services industry, this here is Array, A-R-R-Y, and again, another nice gap, most likely off of earnings. I don't really care. But you can see we're hitting some resistance right here above 17. But take a look at this lower trend line. Every time it comes down to this trend line, it bounces, it bounces. This is an ascending triangle, really nice pattern here. I like this one for a breakout. I think you need to use 18 as a target. I think you could go up to 19, possibly 20. But I don't know if this is the one to be as bullish on as some of the others, but I do like this one. Looking at like a 17, 18 vertical spread would be very nice. It's a very simple trade, very easy, probably cost you about 35 cents to get into. So you've got 35 cents of risk and 65 cents of upside potential. On the sideways one, here is Nordstrom, JWN. And you can see here, we've just got a big band of resistance here at 25. We've got ultimate support down here at 20. So this is the range, 20 to 25. Now, I'm looking at the market as being a little bit more bullish than bearish. And so I want to look at this sideways trade and say, okay, I think it's going sideways, but it's probably going to stay up closer to the higher end of the range, even though today was a pretty nasty candle, down 5.4%. The whole sector and industry group got hit. I'm really looking for something like between a 22 up to 25. Again, I want to be in the upper end of this range here with something like butterfly, a diagonal call spread, diagonal push spread. It doesn't matter. Calendar spread, it really doesn't matter. But I want to be in a sideways strategy somewhere in this 22 to 25 area as my profit potential. So sideways on Nordstrom. And then as a short, this is really the only good-looking short I found out there. There were some other things that looked okay and looked like they were ready to trigger, but boy, this one is in trouble. Take a look over the last 4 days. We've had a very bullish market over the last 4 days, and we've got red candles. Every day, it just cannot get any more buyers, and today was nasty and ugly. We are going to have some support down here at this 136 area, so I like that as the target. I'm also looking to play a vertical spread here, and probably a fairly short-term one out to next Friday, looking at like the 136, 140 bear call spread. That's probably going to get me in something around $2.60. It means I got $1.40 of risk. That's a nice solid trade here on ABBV. So let's talk about tomorrow. Tomorrow we have the payrolls report, as it is the first Friday of the month. Estimates are for job gains of 250,000, unemployment at 3.6%, and wages at 0.3%. I said on the trading room last weekend that I actually thought that this was a pretty interesting report because typically when it's a good jobs report, that is bullish for equities and for the markets. I made a comment that I could actually see a strong jobs report be a little bit of a negative for equities here, because I think everyone was looking at the markets and looking at the Fed and they see, inflation's high, but it's coming down, and they are hopeful that we are going to avoid a deep recession. And I think with a hot number, let's say the jobs come in at 350,000, I actually think that puts the Fed even more back on the table as going to continue to raise interest rates. So anyone who this week and last week decided that the Fed wasn't going to be as aggressive as they thought before, they're going to have to go right back to where they were, which means they've got to pare back and scale down their new positions they took and go back to a more defensive posture. I think a very weak number also spooks the market. Like, maybe we are going into recession. So if the number comes out like 100,000 jobs created, I think that's a problem for the market as well. If you're a bull, I think you want to get pretty close to the number, as close to the number as possible. I think the market likes that quite a bit. If jobs come in at 200, 250,000, 275, somewhere around there, I think the market's saying, okay, we've priced in everything we expected, and there's no need to make any change. And when uncertainty is less, people tend to buy a little bit. So I could see that being the best case scenario for bulls. You want this number to come in pretty much right at expectations. We have a few earnings tomorrow, nothing all that big. And so I think tomorrow's really going to be all about the payrolls report. Look, I could say I think it's going to go up or go down. Here's the reality. I don't know what's going to happen after the payrolls report. That's why it's called trading. We have our analysis right now, which is we are in a moderately bullish market at the moment. Anything could happen tomorrow, and we'll take that data and we will analyze that data over the weekend, and we might make an adjustment saying, hey, the market is not as bullish anymore as we had previously thought. Or we might even ratchet up, say, boy, this is looking a lot better than even before with this new data we got off the payrolls report and the market activity on Friday. We may move up to a +3 market, which is an extremely bullish position in the short term. So tomorrow, again, understand there's going to be probably some volatility up and down tomorrow. We're likely to see a pretty big candle, but I would not be surprised at all if we saw a bunch of volatility. Big runs up, big runs down, and we pretty much close where we are today. If I had to make a bet on what the most likely scenario is tomorrow, that would be it. A lot of volatility, a lot of fireworks in the morning, and then at the end of the day, it just putters around, it peters out, and everyone packs it in for the weekend, and we pretty much close where we are today. Thanks for joining me. That is the Market Roundup. Goodbye, everybody.